All right, we are looking at futures at session lows, 30 minutes till the start of the cash trade. I'm Matt Miller.
And I'm Danny Berger. Bloomberg open interest starts right now.
Coming up, President Trump warns the strikes on Iran may last weeks and tells Tehran's leaders to stand down.
Oil surges the most in 4 years as tanker traffic through the Strait of Hormuz stalls, and a key Saudi refinery shuts down along with Qatari LNG.
And as the war with Iran escalates, inflation fears resurface, piling pressure onto markets that were already on edge.
And the individual equity reaction, Matt, it's one that you would expect. Energy stocks go up, as do defense stocks. Let's look at some of the moves. Exxon up nearly 5%, Chevron 3.5%, Halliburton 4.5%. And it did seem like the big catalyst for the move to extend this morning, Matt, was Qatar shutting down production of LNG from what is the world's biggest export plant. Already there's been disruption around the Strait of Hormuz, but it seems to be growing in size, that amount of disruption.
Yeah, disruption or even closure, really, if it's a self-imposed closure. You can see defense stocks are obviously up across the board. Traders preparing for a prolonged war in the Middle East, maybe not a couple of days, maybe not just a week, but maybe multiple weeks, or a conflict without end, with Iran's security chief ruling out negotiations with the U.S.
And you can see that reaction in markets, de-risking, weighing the impact of war on assets and interest rates. The timeline is still unclear, with President Trump saying the Middle East operations could last weeks. Here's Defense Secretary Pete Hegseth in the last hour.
Iran's stubborn and self-evident nuclear pursuits, their targeting of global shipping lanes, and their swelling arsenal of ballistic missiles and killer drones are no longer tolerable risks. Turns out the regime who chanted death to America and death to Israel was gifted death from America and death from Israel.
Let's get the latest with Bloomberg's Dan Williams, based in Jerusalem. And Dan, in that press conference, Secretary Hegseth said that the objective is not a regime change war, but the regime did change. Where do things stand on the ground now?
The war continues. It's in its third day. The Iranians appear to be measuring their response in terms of husbandry, what's also known as missile math. They've been firing in a great number of directions, not just at Israel, not just at U.S. bases, but sometimes at the properties of neighboring Arab states as well, bringing in quite a number. And in fact, even Cyprus, a European country, feels that one of its sites was under attack from an Iranian drone. That has caused quite a deal of upset in Europe and a possible preparation by some European powers to enter this in some form. So the war is expanding. When it comes to Israel, that's the corner of the Middle East where I am right now. The Israelis have or see a second front opening up now with Lebanon after Hezbollah fired some half dozen rockets into northern Israel overnight. The Israelis had warned Hezbollah not to join in, but it had seemed given that Hezbollah receives both funding and ideological guidance from Iran. And after the supreme leader of Iran was discovered or declared dead in that initial U.S.-Israeli assault, it seemed really unavoidable that Hezbollah would have tried to avenge his death.
Dan, how much of Hezbollah still exists? I mean, we have had reportedly incredibly good intel coming out of Israel. And of course, we all watched the destruction of, for the most part, Hezbollah via Israel in the Gaza war. So how much of these proxy armies still exist, and how much firepower does Iran have?
That's a terrific question, and it's worth noting that in the run-up to this war, neither Israel nor the United States were very keen on giving an account of what might remain in the arsenals of Iran, of Hezbollah. I think they were keeping things close to their chest. I think they were trying to lull those parties into a sense that war might not be imminent. Obviously, the more you drum up enemy capabilities, the likelier the enemy is to see an attack coming. However, what we've now been told about Iran by the Israeli side was that before this war erupted, i.e. as of Friday of last week, they had some 2,500 ballistic missiles of various ranges, some able to reach Israel, perhaps even southern Europe, and others closer, able to threaten US bases and neighboring Arab states. Now, if one assumes that some 500 were fired over the weekend, which seems about right given the accounts from Israel, from UAE, from Kuwait, from Saudi Arabia and the like, and say an equal number were destroyed on the ground by the United States and Israel. It's certainly one of their objectives. One would imagine that at this rate of fire, the Iranians can go for another 4 or 5 days at most. So I wouldn't be surprised if they're choosing their targets more carefully, perhaps mixing up missiles with drones to provide as much variety and to extend their capability to maintain a cycle of fire to show they're still in the fight. As for Hezbollah, indeed, they were beaten back by Israel when they fought Israel in parallel with Hamas during that Gaza war. In fact, they held their fire since the ceasefire of 2024 between Israel and Lebanon, even though the Israelis kept killing Hamas members, sometimes at a rate of about one a day. What they said was an enforcement of that ceasefire, a prevention of a retrenchment of Hezbollah in southern Lebanon. However, they are widely believed to have retained tens of thousands of fighters, thousands of missiles and rockets as well, perhaps some of those precision guided. Now, it's possible Hezbollah is not in a rush to give up what remains of their arsenal. However, they could potentially cause significant damage, especially with those precision-guided systems when it comes to Israeli infrastructure and with those fighters should they engage Israeli soldiers face-to-face.
All right, really valuable information, Dan. Appreciate your reporting over the weekend. Dan Williams there live out of Jerusalem. Now, oil has spiked as tanker traffic and refineries in the Middle East are at a halt. Let's bring in Bloomberg Intelligence commodity strategist Mike McGlone. Mike, it's worth pointing out as well that even if Iran publicly says it doesn't intend to halt traffic through the Straits of Hormuz because of a spike in insurance prices, the ships that are gathered, I have heard estimates that about 150 are waiting, have decided not to try and pass through.
I think that's the key thing, Matt, you started there. It's never been really officially closed through military action. Right now, I think people are curtailing to be prudent to stay away from the action. But the bottom line is by the end of this week, if there's still a problem with offensive missiles leaving Iran and them not being rendered defenseless, which I expect they will, then we've got a problem. But right now, this is just day one of markets open. We've got Brent crude bumping up to near last year's high, which is about $82.63 a barrel, gold up. But these markets are already very expensive. They're priced for right now a bit of a worst case. I think the situation will probably be toned down by the end of the week. If Iran can't keep sending missiles out indiscriminately, I mean, they're not attacking. It's just an idea of can they really curtail supply significantly? And I think that's unlikely.
Mike, how is this pricing in the worst case? I got to ask, because even though the percentage seems big, we're still under $80 a barrel. Harvey or Blast pointing out that with this move, if it were to hold, it would only be the 53rd biggest move in oil, despite the fact U.S. and Israel attacked Iran, killing the supreme leader with objectives of regime changes, with attacks on oil energy infrastructure. Isn't that remarkable that we're only trading on NYMEX crude $72 a barrel?
Danny, you nailed it. Partly because the answers have changed. The price maker status is switched to the Western Hemisphere. Just U.S. and Canada alone this year approaching net surplus of supply versus demand, approaching 8 million barrels a day. To put that in context, Iran exports less than 2 million barrels a day. So this is short term, but this is accentuating the bear market strategy, which is all these Western producers are looking forward on that curve and saying, thank you, I'll sell forward, I'll bring on more supply. And the bottom line is we have an election coming up, and the leader of the world's largest energy producer, net exporter, wants prices lower. What do you think is going to happen by the time we get to November? I'm pretty sure that green candle we see in crude oil right now will switch to red by the time we get to the midterms.
All right, Mike, thank you very much for joining us this morning. Bloomberg Intelligence commodity strategist Mike McGlone. And that oil price spike, it has seeped into other assets. Bond yields are moving higher. The 10-year yield's back above 10%. There's a question, does this force the Fed to keep interest rates elevated? Joining us now is Bloomberg macro strategist Michael Ball, who was formerly, we should note, at the New York Fed. Mike, how are you thinking about the transmission mechanism of what's happening in the oil energy infrastructure right now, and as to whether it does impact the Fed's path from here?
Yeah, I think it's important to note that Treasuries are no longer the safe haven. They obviously got the bid immediately, but then people went right to this inflationary story. And going out of last week into this weekend, we already had that stagflationary tone weighing on cyclicals, weighing on small caps as we got a stronger PPI. So the Fed has been sort of vindicated in their patience, and now we're seeing basically cuts move back into September now, so basically out of June and July. And that's a worry for things that are more duration sensitive or refinancing and all this stuff that's kind of kept this reacceleration trade going for the first 6 weeks of this year.
All right, so we see the 10-year yield back above 4% as that tug of war between, on the one hand, safe haven seeking, and on the other hand, inflation concerns is seemingly won out by inflation. What do you expect to see in stocks this morning? I was talking to a bunch of traders yesterday who saw, for example, cruise operators diving today. What are we going to see in terms of the fallout?
Yeah, I mean, it is doing what you would expect right now. I think what we want to look at is the next leg, which is probably, again, back to this idea that we now no longer have this financial condition easing priced in as much for the second half of this year. So every fiscal boost and basically the easing boost we've gotten from already what the Fed has done is going to hit a little bit of more of a wall. The consumer now is going to have greater uncertainty. They're going to see the pump price go up likely if this continues. Now, we don't know how long this will go, and that's obviously the big question everyone's asking. But all of this comes down on confidence again and acts as a tax on the consumer. So your multiple expansion needs to come in a little bit as far as your expectations. And again, you had a great interview with Lori from RBC this morning who kind of nailed down the head. We need to be patient, but again, these are greater headwinds, and now the Fed has to be more patient.
Lori was also really great in all those studies, those historical studies and conflicts you should buy the dip, saying that most of them were based on short-term conflicts, that if you look at large-scale wars, most of them ended with stocks lower over the next 12 months.
No.
But isn't this, Michael, I mean, the thought from markets is that you can use Venezuela, and I heard you talking about this with John on surveillance this morning as well. You can use Venezuela to some extent as a roadmap or a playbook.
That's what Trump wants to do.
Exactly.
So I think what the markets got spooked by a little more was that we took out too many of the leaders, and that Trump said some of the guys he wanted to come and replace were basically killed in the initial strike and unwittingly known by the U.S., which shows there isn't this real coordinated attack. It was kind of a whimsical thing that killed too many people. And I hate to use these words so freely, but that's what happened. And unfortunately now regime change, or I should say a regime adjustment, which is basically what's really occurring, is less certain and hence more prolonged of uncertainty, and hence the market has to price the risk.
There's no Delcy Rodriguez left is the point. But the question is, does the president want regime change, as he has been saying himself on Truth Social, or does he want leadership change, as we saw in Venezuela with the same regime still in place? We're going to continue to talk about this, and you can follow Bloomberg's Michael Ball and the MLive team on your terminal. Just type MLIV GO. In terms of futures, as we kicked off the show at session lows here, we remain there with S&P futures down 1.2%, NASDAQ futures off 1.5%. Let's get a look at some of the other single stock stories. Amazon Web Services were disrupted after one of its data centers in the UAE was hit by unidentified objects. So that stock right now is down about 2.33%. NVIDIA is investing $2 billion in both Lumentum and Coherent to support R&D. You can see NVIDIA shares, the all-important NVIDIA stock down 1.7% in the pre-market this morning. Berkshire Hathaway's operating profits fell nearly 30% in Warren Buffett's final quarter as chief executive officer. You can see Berkshire Hathaway stock down 1.5% in the pre-market as well. When we come back, we'll turn back to Iran with Council on Foreign Relations Middle East senior fellow Stephen Cook. We'll ask him if the administration in the U.S. wants an Iranian regime change or just a leadership change under the same IRGC. This is Bloomberg Open Interest. Getting out of high interest, look what's making headlines around the world. Anthropic's Claude chatbot went down today with thousands reporting problems on the monitoring website Down Detector. The company cited errors affecting Claude.ai and its coding tool, but said the API remained functional. The outage comes as Anthropic faces surging demand and a high-stakes dispute with the Pentagon. JP Morgan is trying to gauge just how big buyout deals can get as Wall Street gets nervous after helping fund a $55 billion takeover of Electronic Arts. Bankers say huge deals now need way more cash up front and more investors to share the risk. We'll hear more from JP Morgan's chairman and CEO Jamie Dimon in a live interview today at 2 p.m. New York time. And Morgan Stanley says the Iran conflict likely won't derail its bullish call on U.S. stocks unless oil prices spike and stay elevated. Strategist Mike Wilson says that past geopolitical shocks rarely cause lasting market damage, but RBC warns history may not apply this time, saying broader economic pressures could complicate the outlook. Danny?
That is the question. How long does this last, and how long does oil price stay elevated? Joining us now is Council on Foreign Relations Senior Fellow for Middle East and Africa Studies, Stephen Cook. He is also the author of The End of Ambition, America's Past, Present, and Future in the Middle East. Wonderful to have you this morning, Stephen. How are you viewing this question of duration? What are you looking out for to understand just how long this conflict may last?
Well, the president was very clear yesterday this could take 4 or 5 weeks. There's two things really I'm looking at. One is the Iranian rate of fire. They can't fire forever. Their systems for launching missiles have been damaged. On the other side, the United States and Israel have a limited number of interceptors. So that may, in fact, be a forcing function for the parties in the conflict, is that they just don't have the munitions to carry on for very long. The second thing I'm looking at is what are the Iranian people going to do? The president has now called upon them twice to come out into the streets and bring down the Islamic Republic. So far, we've seen sporadic celebrations of the death of Ayatollah Ali Khamenei, but we haven't seen the mass protests. That may be a function of the fact that there are bombs falling in major cities in Iran. But so far, it seems that the regime is hanging tough.
Do we assume regime change is the objective here? I know the president has stated that on in a couple of posts. However, he's also said that he wants to use Venezuela as a roadmap. And in that case, we didn't change the regime, just installed a sort of U.S.-friendly leader in the same old regime. How's it going to go this time, Stephen? And does that distinction matter?
That's exactly right. It seems to be that the president is confusing two things. One, he is calling for regime change, which would be the overthrow of the political system and the accompanying social order in Iran. At the same time, he's saying, well, I'll make a deal with some member of the IRGC who's willing to make a deal, which would just be a leadership change. It seems to me that that is something that he would be satisfied with. But here's the interesting wrinkle. Despite all the talk about unity and planning and the way in which the United States and Israel are operating together, there is a difference here. And the Israelis are quite concerned of a Venezuela option. They do not want to see a reconstitution of an IRGC state because they believe it'll continue to be a threat to Israel's existence. So they may go about, sorry, I didn't mean to interrupt.
No, please
they may
continue on.
They may go about killing some of those people that the president has been thinking about in the aftermath of the first blows that the leadership has taken.
Well, one of the things that I wanted to ask you about that feels very different from what happened in the 12 days in June is just the Iranian response. Last time it was very well telegraphed. It felt symbolic. This time is different. They're attacking energy infrastructure. They're attacking their Gulf neighbors, which has expanded to 11 different countries in the Middle East. Stephen, just how different is this? For all those who say that this will be maybe short-lived, is this an Iranian and IRGC that's backed into a corner and may act irrationally?
It's certainly an IRGC that is backed into the corner, but I think that there is a strategy here. The intention is to widen the war and regionalize the war and even bring the war to Europe. They've fired on Cyprus, a member of the European Union. And the goal there is to put pressure on those governments, the Arab governments, European governments, to bring the United States and Israel to heel. So far, that seems to be a miscalculation. The Arabs are coalescing and hanging tough and have issued very, very tough statements about the Iranian attacks on their cities. The big three European allies, Britain, France, and the UK, have talked about perhaps joining the fight should the Iranians continue to fire on their partners in the Middle East as well. So far, there hasn't been a lot of political pressure in any of these countries, nor have the leadership felt the countries to beseech the United States and Israel to stop the fighting. I was messaging with some friends in Abu Dhabi today. They are hoping that things will calm down in the coming days and airspaces will open once again over the weekend. I think that's a function of their calculation of how much more the Iranians have or how little the Iranians have left to fire.
I wonder about the potential of the Iranian people to overthrow this regime. Surely they have a secret police force, they have a morality police, they have the IGRC watching, listening, and controlling to some extent what citizens are allowed to do. And they've shown that they're willing to kill thousands and thousands to stop an uprising. How likely is it that, you know, the actual people in Tehran could do something about the regime?
The president has rolled the dice here. I don't think that there's any real way of knowing what the capabilities of the Iranian people are. I think we looked at, and he looked at the massive protests that took over Iran in December and January. I think that if you take a longer view, Iranians have been in open revolt against the regime since at least 2009. And the hope is that if you destroy the IRGC, you do a lot of damage to the Basij, you decapitate the leadership, it will provide an avenue for people to get out into the streets. They will no longer fear the regime as they once did. But as you point out, Matt, this is a regime that was willing to use heavy fire against their own people, killing somewhere in the neighborhood of 30,000 people. So we'll just have to wait and see what the Iranian people do. I know that Reza Pahlavi, the son of the deposed Shah, who hasn't been in Iran since he was 18 years old, said to the Iranian people, "I will wait for me to call you out into the streets." We'll see if they respond when he does.
All right, Stephen, great to get your take. Really appreciate it. Counsel on Foreign Relations Senior Fellow Stephen Cook. We will continue to cover what's going on in this Iran war and its effects on the markets. This is Bloomberg. Quick check on futures here ahead of the opening bell. You can see we're at session lows with the S&P futures down 1.2%. This is Bloomberg. We are moments away from the start of cash trading, and this is the first day, obviously, of trading since the U.S. and Israel launched their attacks on Iran. S&P futures down 1.1%. So you may have expected a bigger drop than this. NASDAQ futures off 1.4%. You can see and hear the opening bells on the New York Stock Exchange. FIFA ringing the opening bell, Atlanta there, and also on the NASDAQ market side. Suffice it to say, we're focused much more on the action than the bell ringers today, as for the most part, you're going to see drops, although there are a couple of sectors where obviously you'll see some real strong green arrows.
Yeah, and I assume one of them you're referring to is energy. That's an obvious one. With the price of oil moving higher, the catalyst for getting new highs in the oil price this morning, I think the biggest move in about 4 years, were those headlines on LNG from Qatar being shut down. It's the oil energy infrastructure we're paying close attention to. ExxonMobil up 4.8%, 4.2%, Chevron 2%, Halliburton about 0.8%, Matt.
All right, defense stocks are another sector that's higher as traders prepare for what could be a prolonged war in the Middle East, with Iran's security chief ruling out negotiations with the U.S., with the U.S. president saying this could actually go on multiple weeks rather than just one. Let's bring in Marianne Bartels, Sanctuary Wealth Chief Investment Strategist. Marianne, I wonder, first off, what's your take on the moves today? We've heard from a number of people already that these geopolitical issues have historically, at least in the last few years, caused ripples, and maybe may present a buying opportunity.
Well, I would agree with the buying opportunity. One of the things throughout my career, and something I actually learned from Dick McCabe, who was a technician at Merrill Lynch for a really long time, is events like this don't change the trend. And markets have been trending up. And what we wrote in our weekly today is that our volume indicators recently hit a record all-time high. Breadth of the market has hit a record all-time high. So I don't think these events are going to derail the bull market. I think they are presenting buying opportunities. And I really like how the market's trading. It's not a harsh sell-off. I like when oil is up that the energy stocks can rally. I like that the defense stocks are rallying. So I think the underlying internals and fundamentals, because we've just had, fourth quarter earnings, which are really strong. Even Mag 7 had very strong earnings. So I think the underpinnings of the market are very strong. But obviously, when you're watching the news, this can be very unsettling for investors. But we keep saying to have patience and to be fearless.
Often when people talk about the spillover effects into equity markets, they speak about it in terms of what's happening with oil. That if oil prices go high enough, they're sustained there for long enough, it puts stress on the consumer, and therefore risk assets look less appetizing. What are you looking for when oil starts to become concerning to you?
So the technicals work really well on commodities. And what we've recently been saying is that before all of this happened, that we could see oil going up to about 70 to 75. And we're trading in that range. I don't even think we've hit 75 yet. But we have to be cognizant that things can change. If we do breach that 75, the next level is 80. And there's a lot of resistance there. So I know a lot of people are saying, if things get really bad, you can see 100. And I wouldn't necessarily disagree with that. But the market is telling me we're not going to see 100, at least not now. I think there's a good chance that we actually stay in the 70 to 75 range, which actually wouldn't have such a negative impact on earnings or on the consumer.
If we take a look at the group-ranked returns on the S&P 500, you can see energy obviously is a beneficiary of that, but everything else is down, and consumer discretionary is the biggest loser. And to me, this highlights an interesting tug-of-war that we've seen in Treasuries. Initially, investors diving into Treasuries, buying them as a safe haven, and then concerns about the rising price of oil lead to concerns about inflation, lead to concerns about what's going to happen in this economy. How do you view it?
So in terms of inflation, I do think we're percolating inflation. And you saw that in the PPI numbers. And if you look at raw industrial commodities, the metal components, they look like they're ready to really have a big breakout, which means PPI is going to stay under pressure, and that's a good leading indicator of where CPI is going. So I do think there's still underlying pressures for inflation, but I still have a sense that interest rates want to go down. And so even though we have inflation, I guess I'd call it the good part of inflation, not the bad part of inflation. And having some inflation is actually good for earnings, particularly on the producer side. But it is something that we're going to have to be cognizant of, I think, as we go out later this year into next year.
It does feel, though, that this isn't happening in isolation, that it's a market that was looking for reasons to sell off. We saw that in past weeks over the angst of AI, of private credit, and now add to that what's happening with geopolitics, too. Marion, does this accelerate a trend to look for places to hide out in this equity market? The rotation that's already been happening, does this change the flavor of it, or does it accelerate it?
It's a great question, because it really has been technology, right? The leadership of the market has been correcting, or the growth part of the market, and you're seeing the value part of the market rally, right? That's where you've seen healthcare, you've seen staples, you originally also saw financials, banks, and energy. I don't think that tech has ended its bull market. I think it's in a correction. I think we'll eventually get to a bottom and we're going to rally again. But the breakout in energy stocks is real. There really is something happening within that space. Other pockets of the market that I've really liked are the metals and, gold itself, silver itself, and the underlying metals. And I think that's a whole new bull market. So I think there's a lot of opportunities for investors to really get some exposure for some long-term gains.
We'd seen the Russell 2000, the small caps outperforming. if inflation is percolating, even if it's the good kind, right, the Fed can't necessarily cut rates. Is that bad for small caps?
I don't think so. What we've said is that there really is a positive shift in small caps. I think this outperformance can last 6 to 8 months. I'm not convinced that it's ready to take over the leadership, but I do think that in our next secular bull market, your leadership is going to be in small cap, and they're going to be in the international markets. International markets have been outperforming. I think they're in the early stages of a secular bull market that can last 10 to 15 years. So I think what's really important for investors is to have a diversified portfolio. And for the first time in my career, Matt, I'm actually saying you can buy assets outside of the United States and hold them probably for at least a decade.
Marian, if I can bring this back around to where we began, just to put a finer bow on it, what are you looking out for the developments in the Middle East to really guide how you're thinking about investing in this period?
It's really about oil. Oil is the key. And if you can keep oil contained, and I would say 80 or below, I think markets are going to be fine. But if you wind up having significant oil supply constraints that scare the markets, where you breach that 80 and you start percolating up towards 100, you're going to have a bear market correction in stocks, which means you'll have a full 20% correction, but I don't think it derails the market. I do think eventually we'll bottom out and continue and eventually hit new record highs in the market.
Marianne, thank you so much for joining us. A year of volatility. We're happy to have you help us guide through it. Marianne Bartels, Sanctuary Wealth Chief Investment Strategist. About 8 minutes into your trading day, let's get a check on the equity market because we continue to fall. We're off of the lows this morning. We're now only down 0.5%. It was really a sell-off prompted by some concerns around oil energy infrastructure, but still the type of trade you're seeing is expected. NVIDIA, those shares leading the gains in terms of points being moved on the S&P 500, announcing new investments this morning. Elsewhere, it is Palantir, Exxon, RTX, so it is energy stocks and defensive stocks. To the downside, a lot of tech still under pressure this morning. The idea being that because this market was expensive, it is primed to sell off. So Alphabet, one of the big losers this morning, along with Broadcom and Amazon. Some of the financials also under stress this morning. JP Morgan down 1.5%. Lisa will be sitting down with the CEO of JP Morgan, Jamie Dimon, at about 2 p.m. New York time. Looking at the sectors, Matt gave you a look into this earlier, and it is one to no surprise that it is energy, the only sector higher this morning, up 1.5%. And Matt, I think you were so right to flag how interesting it is to see consumer discretionary at the bottom. It is the back and forth between this bond market. What is more important, the inflationary impulse or enough of an inflationary impulse that it eats into the consumer, it acts as a tax and makes them less willing or less able to spend on other things besides gasoline and energy?
Yeah, it'll be interesting to watch that tug-of-war play out today in stocks as well as in treasuries. When we come back, Ellen Wald of the Atlantic Council joins us to discuss how escalating tensions with Iran are rattling global oil markets, on which she is an expert. This is Bloomberg Open Interest.
Stocks are off the lows of the morning, but they are still down more than 0.5%, 0.7% to be exact for the S&P. The Nasdaq does much of the same, while the Russell 2000 underperforms as bond yields creep higher, back above 4% for the 10-year yield. Let's look at some of the top calls this morning, what the sell side is writing. First up, JP Morgan. They upgrade Netflix, saying the company remains a healthy growth story following the end of its bid to buy Warner Brothers. The firm says storytelling and talent will help insulate Netflix from AI disruption. Shares only up 0.2%. Next up, Barclays downgrades Blue Owl and lowers its earning outlook on the company thanks to weaker money flows. The analyst warning that AI concerns could lead to more client withdrawals. Shares down 0.7%. And finally, Piper Sandler, they upgrade Crowdstrike, saying AI is an opportunity, not a threat. The firm believes that Crowdstrike is well positioned to capture more demand. And we're going to talk more about cybersecurity in the next hour. We will be speaking with the co-founder and CEO of Fencer on cybersecurity, especially as it relates to the ongoing conflict in the Middle East, Matt.
Yeah, looking forward to that conversation. Let's get back, though, to oil. Brent crude jumped towards $80 a barrel, actually at one point eclipsing that level as the war effectively shut the Strait of Hormuz, a vital artery off Iran's coast that carries about a fifth of the world's oil. Bob McNally of Rapidan Energy Group spoke about the soaring cost of crude on surveillance.
Iran does not have escalation dominance when it comes to military. The only real leverage the Iranian regime can hope to have is over the price of oil, is to send oil prices high for a long period of time and hope that induces President Trump to back off.
Joining us now is Ellen Wald, Senior Fellow at the Atlantic Council. She's also the author of Saudi Inc., the Arabian Kingdom's Pursuit of Profit and Power. And Ellen, let's start on the Strait of Hormuz, as we were just hearing about it from Bob. Iran has said that they don't have any intention now of closing the strait, although it's effectively shut down by a spike in insurance prices and the ongoing war. Isn't it necessary for that country to get revenue to use that waterway?
It absolutely is. And part of the issue with the idea of closing the Strait of Hormuz is that there's no gate that Iran can kind of, lower and say, OK, no more ships can pass or only our ships can pass. The issue right now, as you mentioned, is that insurance companies have priced it as so dangerous, so risky to go through the strait. And given that, ballistic missiles are flying and drones are going everywhere, you can see why they're doing that. And that has effectively halted most tanker traffic. Now, Iran is still going to let its ships go through. Keep in mind, it did load extra oil right before this began. So it's understandable that maybe they don't have a whole lot of oil to send through the straits at the moment. But in a few days, they certainly will. But what we're really seeing here is the fact that no tanker movement is happening. And I would say that we can kind of withstand this for maybe about a week. But once we get longer than a week, potentially, the president mentioned this could last for 4 weeks, we're going to see some serious dislocation in the oil market. And I'd like to hopefully see some plans to at least get some tankers moving, maybe reroute ships. You don't have to go through Iranian waters to get in and out of the Strait of Hormuz. That's just the international shipping lanes. That's the path they've decided on. But there are other ways to go. And so it would be good to see some workarounds and plans in the mix for this so that the oil market does have some understanding of what's going to be happening in the next 4 weeks.
The disruption, though, Ellen, does go beyond just the Strait of Hormuz. When you look at Qatar shutting the world's largest LNG export plant, when the Saudis are dealing with attacks on their oil refineries, how are you thinking about Iran's ability and what they've done with attacking upstream oil infrastructure?
Yeah, this is a big issue. I think Qatar's closed this plant. There are a lot of dangers, even if Iran isn't outright striking these places. It's said that the damage that occurred to Ras Tanura, the biggest refinery in Saudi Arabia, was due to debris from a drone that was destroyed. Now, whether that drone was headed for the refinery or not, these kinds of things are going to happen. I mean, an offshore oil platform was likely hit, an Emirati one. These things are going to happen either as direct hits or as side effects. And so that also needs to be taken into account. I think that if Iran is not going to go all out on the oil infrastructure of neighboring states unless its oil infrastructure itself is attacked. And thus far, we haven't seen any Israeli or U.S. attacks directly on Iranian oil infrastructure. It's really just been contained to military and political targets. If that holds, then I think that the damage will be minimal and we won't see any long-term disruption to oil supplies as long as we can get traffic through, through that area moving.
Ellen, you, as I said, wrote the book Saudi Inc., and you have a great perspective on the Middle East. I thought it was fascinating that Russia and China responded by saying, essentially, how dare you, America? This breaks international law. And then the GCC responded by saying, how dare you, Iran, stop attacking us? Is there any chance that they turn against the U.S., or are they now? Is Saudi and co. A permanent U.S. ally?
Yeah, this is an interesting idea because essentially, Saudi Arabia had repaired issues with Iran. Several years ago, there was quite a big tiff going on between them. But, China had helped mediate between the two. The embassies had reopened. Things were looking fairly good. And then Saudi Arabia was even trying to host nuclear talks at one point. And now, all of a sudden, the Saudis are basically condemning Iran's attacks. And I think once Iran attacked U.S. military assets or tried to attack U.S. military assets that are housed in all of these GCC countries, that was really, that was the end of it. They're not going to stand for this kind of military attacks on their own soil, even if it's directed at American personnel. And instead of galvanizing the GCC against the United States, they've really had them, they're showing incredible unity together against Iran. And I don't think that Iran is going to be able to break that in the coming weeks at all.
Ellen, Matt mentioned China, and I wonder how you see their role unfolding in this, a country which somewhere between 10 and 15 of their energy comes from Iran. Again, it's just been words thus far saying, how dare you, United States, as Matt put it. Is this a China that's going to be unsentimental about changes happening in Iran, or do they take a more active role in the conflict?
That's a really good question. And I think China is absolutely the power to be watching right now because they depend in large part on energy products and energy from the Middle East. They are Iran's primary importer of oil. Now, if they lose Iran as a source of oil, that's not really that big a deal for China. But if they lose all of the Middle East or most of the Middle East or all of the oil and the products that are coming from the Persian Gulf, then that does pose a potential problem. Some of the interesting things to look at are whether China will try to leverage its I would say considerable leverage with the Iranian government. China is one of the main trading partners with Iran. They do have some economic leverage that they could use to maybe push Iranian leadership towards a faster resolution of the military conflict. Though, if things are really far gone, it's not clear how much economic leverage China might really have to push Iran towards this. Their bone in this is that they want their oil. They don't want their ships to be stopped. At the other side of it is that if this stoppage lasts, Asia is going to need crude oil and products. And China has a very large SPR that if it wants to make some money, it could tap both to sell crude oil from it to its neighbors or to funnel that into its own refineries and sell the products to its neighbors. And so that'll be an interesting thing to watch if China decides, hey, here's our opportunity to make some money and sell energy products to our neighboring countries that can't access it. Keep in mind, China may also increase its imports from Russia at this juncture to compensate for delays or losses in oil and oil products from the Middle East.
A lot of dynamics to keep our eye on. Ellen, thank you so much for joining us this morning. Ellen Wald, Senior Fellow at the Atlantic Council and author of Saudi Inc. Coming up in the next hour, more on geopolitics with Middle East analyst Aaron David Miller. Stay with us on Open Interest.
This is Bloomberg Open Interest. Quick check on what's going on in stocks with the World Equity Index. It should say indexes here because Bloomberg style is indexes, not indices. Somebody in programming honestly needs to change that like 10 years ago. The interesting thing here, and somehow we expanded the Americas, which was unnecessary, but you can see how well comparatively U.S. stocks are doing. We're off 0.5% on the S&P, 0.5% on the NASDAQ. Meanwhile, in Europe, and this is a much smaller version than you'll get if you type WEIGO on your terminal, you see losses that are 3 standard deviations away from the 30-day Z-score. Now, only Tom Keene knows what that means, but anyone can see more than 2% here. And the problem is the rising price of natural gas, the difficulty of getting LNG to a continent that already is cut off from energy because of its previous reliance on Russia is a real problem for these operators. So what's going on in Europe is far worse. The implications of this war in Iran are far worse for European equity indexes than they are for the U.S. Danny, don't
you
you think
also
that's
have to remember where they are with the bond markets. This was a BOE that was seen, it was a sure thing that they'd be cutting. Now there are less than 50% odds that the BOE will be able to cut come March, and bond yields there are surging more than 10 basis points. That also adds to the underperformance of what we're seeing in those equity markets. All right, coming up in the next hour, Matt, some great conversations to come. Meredith Whitney on markets and the economic risks from Iran, plus Aaron David Miller walks us through potential regime change in the Middle East. We're also going to talk AI at the Pentagon with former OpenAI board member Helen. Important conversations to come in hour 2 of Bloomberg Open Interest.
We are 30 minutes into the trading day. Welcome to Bloomberg Open Interest. I'm Matt Miller.
And I'm Danny Berger. Markets reacting how you might expect after an escalation with stocks down. Bond yields up, 10-year yields back above 4% as energy moves higher too, Matt.
Yeah, that's not how I would have expected, actually, markets to react.
Tell me how you would have
expected. I would have thought we see more than 1% drops on equity indexes. I would have thought people pile into treasuries, driving yields down below 4%.
But to be clear, directionally, that's what you expected, right?
Slightly. Coming up, President Trump warns that strikes on Iran may last weeks and tells Tehran leaders, those who are still alive, to stand down.
And oil surges the most in 4 years, but still, to Matt's point, below $80 a barrel. Tanker traffic through the Strait of Hormuz stalls and a key Saudi refinery shuts down.
As the war with Iran escalates, inflation fears resurface. And this is why you see the 10-year yield back up above 4%, and it is still putting pressure on markets, although the S&P 500 is still at 68.38.
It is only down 0.5%, easily off the lows. Just want to point out we are getting some breaking economic data. The February ISM Manufacturing Index, it has fallen to 52.4. That is better than the estimates, though, 51.5. Also gets jobs figures at the end of this week. But, Matt, it's hard to see how any of the economic data can break through what's happening in the Middle East. That is the attention of this market at the moment.
Yeah, well, you would think so, right? But then gold is only up less than 1%. I mean, typically, if you start a war that markets have worried for decades could be a quagmire, right, in which the president says, I want regime change, this could last weeks, and we're going to see more American casualties. You would imagine that markets pile into safe haven assets like treasuries and gold, and yet that's not really what's happening.
The first initial move in treasuries was one of yields down. That quickly changes. Maybe concerns about inflation. Matt, I think you're right. The move does seem really subdued, considering that this is an Iranian regime that is now fighting for its very existence. I wonder if just this morning, some of the things that may have calmed it down with, one, maybe people looking to buy the dip because they've been conditioned to believe that geopolitical angst only lasts so long, but also Secretary Pete Hegseth coming out and saying this is not a war of regime change, but regime change is what happened. And rather, the goals was to prevent a nuclear Iran and take out missiles.
Right.
And maybe we've done more. We've done enough to get us there.
All right, let's focus in on this. President Trump says the bombing campaign against Iran could stretch into weeks. And to Danny's point, Defense Secretary Pete Hegseth spoke this morning.
Iran's stubborn and self-evident nuclear pursuits, their targeting of global shipping lanes, and their swelling arsenal of ballistic missiles and killer drones are no longer tolerable risks. Turns out the regime who chanted death to America and death to Israel was gifted death from America and death from Israel.
Let's get the latest with Bloomberg's Dan Williams, based in Jerusalem. Dan, it is the question on this market's mind. What is the duration of this conflict? What do we understand from the American administration's expressed goals of what they want to achieve in Iran and what that means about how long this may last?
The sun is setting on the third day of this war, a war that would appear to be expanding in unpredictable ways rather than winding down. As you noted, the United States saying it's willing to continue bombing into weeks. I haven't heard that sort of timeline for the Israelis. They've spoken more in terms of difficult days ahead, a reduced timeline, if you like. However, they're also saying they're willing to go it as long as necessary to achieve the aims. I think the aim here would be clear. It is the elimination of this Iranian regime. It is the elimination of what remains of its missile arsenal, of its nuclear program. And I think that ties in with the hopes, as expressed at the outset of this war by both President Trump and Prime Minister Netanyahu, that this would create a vacuum that could be filled by the Iranian opposition, an opposition that those countries appear to believe comprises a happy, solid majority of the Iranian populace. So I think what we'll see in the coming days is a change of messaging. The moment that the allies believe that they've eliminated the lion's share of the target set, there will be messaging to Iranians to go back into the street. It's worth remembering that just a couple months ago, a few weeks ago, they were dealt with brutally by the Iranian regime, presumably the arms, the security arms that previously handled repression in dealing with those protests have now been eliminated or significantly cut back, and they may be emboldened to come out and seize the reins. The big question is, how long can the Iranians keep firing? They seem to be extending the timeline there by a more careful, cautious use of their arsenal, including, for example, missiles with dividing warheads, submunition. So you have one missile that could produce as many as 100 warheads. So there's a lot of impact to one launch potentially when dozens of grenade-like warheads are scattered over an entire city. That's in the case of what's been experienced in Israel, potentially in the Gulf as well. But this really is a matter of clocks ticking against one another. And the question of is which side will be exhausted first by this effort.
Dan, you know, maybe I see it in the wrong frame, but to me, the Iranian regime is not the Ayatollah, but rather the IGRC that supports his power. Is the IGRC, is it fair to say they're being eliminated, or will they last stubbornly longer than we hope? And is regime change the goal of the Israelis? Our defense secretary says it's not our goal, but our president continues to tweet out that it is our goal.
I think these things roll into each other. As for the IRGC, they're said to have in the order of 150, 200,000 personnel, at least before this war began. Nonetheless, there is an open call on them to surrender and enjoy immunity should they do so, lay down their weapons, join the general populace of Iran. And I think the planners of this war hope that the moment enough of that skeleton, the skeletal structure of the Iranian state in its current form is busted, is crushed, is broken up, then eventually the entire body will fall apart, meaning not killing or capturing every single one of those IRGC members, but in the hope that enough of them would be demoralized by what they see as the inevitable end of the state they've served, a state they may feel very warmly about, very patriotic about. They may actually take up that offer of immunity. And I imagine the planners are hoping that will be a matter of days rather than weeks.
All right, Dan, thanks very much. Dan Williams there, reporting live from Jerusalem. Now, today we're trading the acute shock in energy via the Strait of Hormuz. But some strategists are framing this conflict as part of a broader reshaping of global supply and logistics networks. Meredith Whitney highlights the middle corridor across the Caspian Sea, not because it replaces energy flows through Hormuz, but because it represents a long-term hedge against geopolitical choke points across Russia and traditional trade pathways. Joining us now is Meredith Whitney. She's the CEO of Meredith Whitney Advisory Group. It's interesting because you could use that framing for what we did in Venezuela as well. Explain to us this middle route theory.
Well, you have to look at what happened in January, which was the formation of the Board of Peace. And at the time, I didn't know what to make of it because you have a large contingent of Middle East countries, Central Asian countries, and then a spattering of Latin American countries and Central American countries. But when you look closer and see the next level, which is what the Middle East countries have in common, is they all stand to benefit dramatically from what's called the Middle Corridor Transport Line. And importantly, many of these countries and some that will be joining the Board of Peace that are not yet in there have very dense and rich rare earth mineral content. So what has happened, and this is a big agenda for Secretary of State Marco Rubio, is to put more money behind what's called the Middle Corridor infrastructure and deflect. Well, since the invasion of Ukraine, the northern corridor that goes through Russia used to command, well, before 2022, command 86% of the traffic between China and Europe. And that dropped in half. And what has happened is the middle corridor, which is really dependent on Turkey and Azerbaijan, and then the rest of Central Asia, has dramatically increased capacity. And the World Bank thinks it will triple capacity in the next 3 years. And the only thing that it misses is money. And so Marco Rubio has about a $200 billion kitty that it can deploy some of this money for. All eyes are on the U.S. Development Finance Corp, led by Ben Black, who I think you've had on your program, Leon Black's son. And you're going to see all of the, I suspect that all of the companies that were called to the White House to invest in Venezuela see much more, much higher returns on their investment in the central corridor. So expect over the next few weeks to see heavy announcements, heavy investments by both private and public. And so when you look at what's going on in Iran, I think there's just too much money at stake to risk a protracted war there.
To that point, do you think that this is also an administration that would be hesitant or would be careful as to not disrupt any of the oil infrastructure in Iran itself? That there is an expectation that if there is a regime change, that oil infrastructure can be used or will be more friendly, kind of in a way that Venezuela, we looked at reshaping their markets, but an Iranian oil infrastructure market that now can also be used to the benefit of the United States as well.
I would put that as mutually exclusive. So when I was with retired generals in early January, they explained that Iran is its weakest point in, since '79. And it wasn't a question of when, it was just a question of if. So when the U.S. moved the USS Gerald Ford into the region earlier, or last week, I questioned why oil was only up 2% on Friday. And then it really hasn't really moved dramatically as you would think. And I think I look at them as mutually exclusive, but there is so much money to be made in this region. Look at the Board of Peace guys, and also look at all the Stan countries that we can't officially trade with yet because there's a post-Cold War ban on trading with the Stans. There's so much depths of rare earth minerals that we desperately need. That's on the congressional floor to be repealed. I expect that to be repealed. That's a big push of Secretary of State Marco Rubio's. So this, again, Venezuela's got nothing on this area in terms of the money to be made for investors.
As you say, you met with a group of retired generals, and you live in Washington, D.C., operate out of there, so you're much closer to the political hub than a lot of the Wall Street analysts that we speak with. Do you think there is bipartisan support for this attack on Iran? I mean, many people on either side of the aisle would say it's decades coming.
Just watching the Saturday shows, it didn't appear to be so. So, there were, is it a violation of international law? That's above my pay grade.
Is there international law anymore? That's
above all of our pay grades, I think, to debate.
So it looked as if it was heavily partisan, but the aftermath is going to be actually really good for everybody. So, the U.S. is heavily partisan, and the world is heavily partisan now. But if if there is regime change, and this then becomes a new peace dividend, if you will, because the peace dividend has been missing for several years now, this could be a complete game changer, and a big positive for Europe in terms of cheap oil for Europe. No wonder Russia and China don't like it, because they've dominated the energy game for Europe, and they've been buying cheap energy from Iran. So I'm not surprised that those two countries are the ones that have spoken out on this, and that every other country within the peace board is very pro this move, and every other move, because they want to get to business.
I got to say, Meredith, just listening to you, it seems like a good reason to fade the move higher in oil and in energy prices. If we might be looking at a new reshaping of oil and energy markets where you do have more access, especially to those regions which were once cut off to America.
I think, it'll take a while to get there. Let's say 3 years to get there, but longer term, it's a really big positive.
All right, Meredith, thank you so much for joining us
you.
this morning. Appreciate your take. That's Meredith Whitney. Coming up on the show, Aaron David Miller, Carnegie Endowment for International Peace Senior Fellow, will join us on these latest developments. That's after this commercial break. This is Bloomberg Open Interest.
Let's get to high interest now. Look at what's making headlines around the world. France will boost its nuclear arsenal, according to French President Emmanuel Macron, who cited doubts about U.S. security commitments to Europe. He said a stronger deterrent is indispensable as Russia's war in Ukraine grinds on and Washington signals a shifting NATO stance. France, the EU's only nuclear power, currently holds about 290 warheads. JP Morgan is trying to gauge just how big buyout deals can get as Wall Street gets nervous after helping fund a $55 billion takeover of Electronic Arts. Bankers say huge deals now need way more cash up front and more investors to share the risk. We'll hear from JP Morgan Chairman and CEO Jamie Dimon today at 2 p.m. New York time, right here on Bloomberg Television. And investors in a $240 million bond tied to a San Francisco office tower just took a $139 million haircut after the loan sold at a steep discount. 6 junior bond classes were wiped out, and even highly rated senior bonds lost over 40%. The building was only 26% leased, and the news underscores how aging U.S. office towers, hollowed out by remote work that has become sticky, have become a hazard for bondholders. Danny.
Matt, let's get back to our top story, and that is escalation and war in Iran. Former U.S. Ambassador to Israel Daniel Shapiro joined Bloomberg TV to talk about the political and economic consequences.
There certainly could be scenarios in which an even more hardline regime takes hold in Iran, one that is not willing to observe actually the limits that Khamenei put on the nuclear program, much as close as they were before last June to achieving a nuclear weapon. He had never given the order to produce one. Maybe a different leadership would decide that now, for their own survival, they must have that deterrent.
Aaron David Miller, Carnegie Endowment for International Peace Senior Fellow, joins us now. He's also served at the State Department as Middle East negotiator and helped formulate U.S. policy in the region. Aaron, thank you so much for joining us this morning. There's this question as to whether we can use past playbooks, whether June, 12 days, something very strategic and limited, can be used as a corollary to today. How are you thinking about this escalation and how long it lasts and what the stated objectives are of the United States?
Yeah, I mean, all great questions. You know, when America acts, particularly in a deployment this large, it should ask itself not only can we do it, but should we? What is it going to cost? And above all, what you suggested, how do you use military force to achieve sustainable political goals? Right now, I think you have a confusion. You have the president talking about regime change, even though he's somehow shackled it on the Iranian public. On one hand, you have the president talking about reaching out. He's actually mentioned the name of the current head of the National Security Council of Iran, one of the few senior Iranian officials to survive the decapitation strike, Ari Larijani. But then you had the Secretary of Defense barely an hour plus ago indicating that no, regime change was not the objective here. So I think there's a serious problem here, and I think it relates to how long the war is going to endure. If it's to do additional damage to Iran's ballistic missile capacity, its production facilities, kill its leaders, deal with the remnants of its international nuclear infrastructure, go after command and control, I mean, that could be a relatively limited operation. If they're seriously thinking about changing the regime, they're going to have to keep the pressure on. And even if they do, history is not kind to those countries who believe somehow that through air power you could rearrange the political furniture of a country, let alone fundamentally produce another leader.
You know, the New York Post right now putting out a story that President Trump won't rule out sending U.S. troops into Iran if necessary. So boots on the ground, so to speak. I wonder if you're concerned that this becomes a prolonged forever war, a quagmire, or if it does look like we'll follow the playbook of Venezuela, where we just take out, the head, leave the regime in place, and choose a friendlier piece of that regime to lead the country.
Well, if you could get that, if you can get an Iranian Delcy Rodriguez, an ideologue to be sure, but a woman who clearly is much more pragmatic. But, Iran is sitting in the middle of a combustible, volatile region. It's still headed by a regime that can deploy 1 million security forces, IRGC, 200,000, the Basiji who control the streets, the Iranian military. They have short-range ballistic missiles. They've already fired in the last 2 days about 400 of those, maybe more, and struck 9 countries. During the 2-week war in June with the Israelis, they fired a total of 500. So Iran still has some capacity. Look, the war, I suspect, will conclude when the President of the United States understands that he's reached the limit of what our defense capacities will allow, particularly in terms of our interceptors. He'll reach a conclusion when oil, which is what now, it's gone up 10%, it's trading around $73 a barrel, that could go higher. And he'll reach the conclusion if, in fact, you end up with significant American casualties. So, no, I don't think this is a forever war. But one thing is sure, I don't think we're talking about a day after or even a month after. I think this is going to continue for quite some time.
Aaron, do you also think we risk underestimating just what the Iranians are willing to do? If it is a regime backed into a corner, if it is a mission from the United States with such unlimited goals, are they essentially incentivizing a regime to use every means at its disposal in order to stay alive?
The balance between self-preservation and suicide is a pretty clear one, I think, for the regime. And above all, Ali Khamenei, the supreme leader, is no longer with us, fortunately. But his major objective at 86 was to ensure a transition which would allow the revolution. And Iran, Henry Kissinger once quipped, is a revolution, it's not a country. And there's some merit in that analysis. But was interested, and now those who have succeeded him want to maintain the structure and the control, certainly the IRGC, with some clerical input. So, no, I don't think the Iranians are self-destructive. I think they badly misjudged the United States and the Israelis, but I don't think they want to commit suicide. So they'll look for a balance between drawing blood, if they can, on one hand, and not creating a situation where they end up in an asymmetrical major confrontation with the United States that has shock and awe delivered over months and months and months. I don't think that's what the Iranians want.
And I want to note we have a headline coming across from CNN saying that President Trump says a big wave has yet to come in the Iran war. So maybe we haven't seen the shock and awe that we could in the coming hours or days. How does the balance of the Iranian people view this conflict? We've heard that there was celebration in the streets after the death of the Ayatollah was announced, but it does seem that public opinion there swings, and they're not necessarily very supportive of the U.S. intervening.
I mean, you may have, over the last several years, have had, maybe 25% of the Iranian public, political elites that are not in power supporting the regime, but this regime is hollowed out. It's lost, in my judgment, any measure of credibility. It's lost any effort to deliver a political liberty, a life, prosperity to the Iranian public. And the killings in the first week of January, the willful and indiscriminate murder of as many, the president referred to 32,000 Iranians killed within a week, and the numbers of arrests, which are much larger than that. No, I think the public has had it. The problem is, how do you translate that kind of hatred and animosity on the part of the Iranian public to take action? And the only way it seems to me to happen is if you have a fracture within the security, within the regime, elements that control the instruments of state power, the oil, the money, the instruments of repression. When you start to see that, then I think the streets will speak even louder and maybe even decisively.
Aaron, thank you so much for that. That's Aaron David Miller, Carnegie Endowment for International Peace Senior Fellow. I want to take you to break on a view of yields moving more than 10 basis points on your 10-year yield after hotter prices paid on ISMs. This is Bloomberg. A look at this bond market this morning, which you can see at the very early hours started with a rally as we moved to havens. Then it changed as oil prices picked up with war in Iran. Now they're moving even higher after ISM at the latest prices paid at 70.5. Omer Sharif of Inflation Insights pointing out that that's the highest since June 2022. It is the impact from higher raw materials because of tariffs. And now we have to contemplate maybe inflation gets even worse if oil prices are moving higher and the Strait of Hormuz is effectively blocked.
Yeah, absolutely. I will say, first of all, Omer has been spot on in his coverage. Obviously, this is his job, so he's doing it well. But it's fascinating to me to see the safe haven effect in Treasuries, last night and this morning. Investors worried about war and buying the U.S. Treasury, and they've thrown that out the window now, worried about inflation, selling Treasuries, and yields rise. It's
the other remarkable thing, though, is usually it's like the bond traders who are very chilled out and really sensible. Instead, it's equities this morning. Only down 0.4%. At one point, they were down more than 1%. It's been the reaction in bond markets that has stood out as the more aggressive one.
Well, you typically don't see this kind of volatility, right, in bonds either. That's more of an equity thing. And we've seen a muted move index, and even as the VIX has moved higher, but that's really shifted places. Joining us now is Tyler Kendall, Bloomberg Washington correspondent, to talk about what we know out of D.C. And Tyler, it's interesting that we're getting kind of mixed messages because at 8 o'clock this morning, Defense Secretary Exec came on and said, we're not looking for a regime change here. But President Trump has been tweeting out all weekend, encouraging regime change from the Iranian people.
Well, Matt, we've received various goals and at sometimes contradictory goals out of this White House when it comes to the objectives behind this operation, as U.S. officials maintain that this will be a sustained military campaign until their objectives are reached. Now, as you mentioned, we heard from the Defense Secretary Pete Hegseth earlier today outlining that the original goal was not what he called so-called regime change, but that the U.S. does hope that the Iranian people, quote, take advantage of this moment. President Trump, of course, as you're mentioning here, has called on the Iranian people to take over their government. Yet at the same time, he has also indicated in a series of interviews over the weekend that he would be willing to engage with Iran's transitory leadership team, currently comprised of a 3-member interim leadership council. He told the New York Times in a brief phone interview that this could potentially take on a model similar to what we saw happen in Venezuela, where we could see some remaining factions of the Iranian government stay on in a leadership capacity if they were willing to cede to U.S. demands. So that is raising some questions here about exactly how the White House is ultimately measuring its progress and what it will take for this military campaign to end. As we heard Matt and Danny from U.S. officials earlier today, they say that this isn't going to be an endless war, in Pete Hegseth's words, but that ultimately it's going to take time for the U.S. to achieve its objectives.
Tyler, thank you so much for your reporting this morning. Bloomberg Washington correspondent Tyler Kendall. Now, Amazon cloud services have been disrupted after an object hit a data center in the UAE, raising fresh concerns about the vulnerability of critical digital infrastructure as tensions with Iran ramp up. Joining us now is Vlad Rikhter, CEO and co-founder of Fencer, a cybersecurity platform. Vlad, a lot of questions being asked about how Iran acts out at this moment, especially if they're backed into a corner. How should we think of their cyber capabilities and the potential for disruption along the more digital infrastructure lines?
Yeah. Thanks for having us here. So I think there's probably 3 layers that we'll see, right? The first one's already in the field of battle or in the theater of war, where they're attacking the drones and they're trying to, move them out of the way and potentially attacking the companies that are making those. And we'll see more of that going through. I think the second layer starts to get more into the general infrastructure that you have back in the United States, right? You try to attack airports, you try to attack energy facilities, water utilities, the things that upset Americans on a day-to-day basis to all of a sudden say, whoa, hold on a second, we wanted no part of this. Let's get out of it. And I think the third part is then general kind of consumer applications that we use on a regular basis as well. And so it'll be a mix of both the Iranian government, but also some of their quote unquote hacktivists that they have that are out there that are just, free, kind of off on their own doing what they feel is important for the cause.
Right, and maybe their allies as well. I heard an acronym on Bloomberg surveillance this morning I'd never heard before, CRINC.
Yeah.
Did you hear that?
Yeah, I did hear that.
China, Russia, Iran, and North Korea. And you've pointed out, Vlad, that Iran's cyber capabilities aren't quite as sophisticated as those of Russia and North Korea, but of course they all operate on the same, their enemies would call it axis of evil, right? So I wonder if, as we hurt, the Chinese ability to get cheaper crude or Russian ability to demand more money for their crude, if they team up in cyber against us.
Yeah, I think you'll see that coming. I mean, or if you don't already in certain ones, it depends on who they're targeting, right? The higher asset targets of the defense companies in the United States will obviously see a massive attack on some of those fronts. At least you would assume they would, and then you'll see less and less as you go down the sort of supply chain of providers.
How well prepared are we for that?
It depends a little bit on the company itself or the organization. Look, if you look at our infrastructure, a lot of it's relatively dated. Some of that's actually good because it doesn't touch the internet, right? The control panels in some of our environments in the utility spaces are not connected to the internet, so you're not going to easily turn those off, right? But there are other places where we're not updating software, we're not dealing with the identities that are changing within companies, and we're not making sure that we're protecting the vulnerability side within an organization. And I think what you have to understand is that with AI itself, you can now turn around and have a much larger area of attack with more agents that are trying to destroy and find little holes in your systems. And so you as an organization need to find ways to fight that, as quickly as possible.
Also, the backdrop of all of this was the drama unfolding at the Pentagon, whether or not they'd come to some sort of agreement with Anthropic and instead turn to OpenAI. How do you understand the willingness of these companies to completely open up to the U.S. Pentagon and how that shapes how they're able to use AI and especially fend off various attacks?
Yeah,
or increased surveillance of our own citizens.
Or that.
Right. Yeah, so, look, I will, there are parts that I actually deeply agree with on Dario, which is Congress should get in the middle of this and say, listen, we need to make some decisions when it comes to, specifically when it comes to the autonomous weapons side of it. I think the challenge right now is that, you've got 5 major models in the US, right, between Grok's XAI, Google Gemini, OpenAI, ChatGPT, Anthropic, and I'm missing, of course, the last one. And the challenge is that they're all trained on the same data set. And so over time, they're not going to have much of a moat, right? They'll get to the point of where they'll basically provide the same level of information back to the users when they're querying it. And so the government, in some ways, has a lot of options of what they can do. And whoever's going to play ball is going to turn around and end up working them, at least in my opinion. And I think you can see it now. There was a comment over the weekend that it'll take the government 6 months to remove Anthropic out of its systems. I don't know the last time the government took any software removed in 6 months. If it's really going to take 6 months to remove it out, they'll hop to the next one that makes sense for them. And I think that's, you would hope that there's better protections that are there for U.S. citizens and autonomous weapons, which are obviously quite dangerous.
And scary if you are a fan of the Terminator series. I want to finally ask you about the Citrini research note that kicked off last week. Are you concerned that artificial intelligence drives us to 10% plus unemployment in a couple of years?
No, I'm a pretty big optimist when it comes to this, and we see it in our own company. So just to give you a quick anecdote, about a year ago, 5% of the code that was written in Fencer was written using one of these AI tools. Today, it's north of 60%, and by the end of this year, I'm sure it'll be north of 85, 90%. In reality, what's happening, though, is that it's creating a lot more work for everyone else that's around. More code being created, more work that needs to get done, more features that need to be built, and so people become more efficient. There will be some short-term pain in certain areas, right? Less customer service reps, maybe less product managers, less sort of busy work moving around. But the reality is that the investment and the productivity gains are going to be massive, and you're going to see companies turn around and deploy significantly more and invest in areas that they weren't to otherwise. And I think for the consumer, it benefits. Like, the prices will keep dropping on core things that we use.
So Block, Vlad, what happened with Block?
Oh, my opinion of Block is that they have been extremely bloated for a long time. I mean, that's a company that I think over the course of the last 12 months has grown 2.5%, and there's over 10,000 employees there. I do think AI has a big impact on it, but AI is not at the point yet where you could say, let me just go ahead and lop out 40% of my company, which is, I think, the single largest cut in the S&P 500 history. Some portion of it is definitely applied to AI, for sure. But the company had some practices historically, lots of folks walking around not doing that much work there.
Great having you on the program. Hope we can get you back soon. Vlad Rikhter there is the CEO and co-founder of Fencer. Let's get a quick check of what's going on in markets, or we can ruminate for a little bit, because it is fascinating that the S&P 500 has only lost now 0.4%. We're at 6850 on the benchmark index, even as the U.S. and Israel have launched attacks over now the third day against Iran, including killing the Ayatollah Khamenei. The NASDAQ is down a similar measure. But the most interesting move that I've seen thus far is in the 10-year, because investors had piled into U.S. Treasuries for safe haven. And now they're selling U.S. Treasuries, pushing the yield back up above 4%.
There's two things going on. There's a question as to whether higher energy prices mean that this is a Fed that is going to be facing more inflation. But there's also the question of inflation that is already here. ISM manufacturing comes in not only greater than expected, but prices paid moves to 70. That is the highest figure since 2022. It is tariffs coming through with commodity prices going higher. And again, they might only move higher if we are contending with oil and energy prices, which are set to lift from here too, Matt.
Yeah, as you were talking about before, Omar Sharif from Inflation Insights writes in and points out that 14 out of 18 industries reported paying higher prices for raw materials, particularly steel and aluminum. And of course, you can see there at the bottom of your screen that they're going to be paying more money for oil as well, as Brent crude rises up to $78.48 a barrel. Coming up, AI's growing role in modern warfare. We'll talk to former OpenAI board member Helen Toner next. This is Bloomberg Open Interest. OpenAI says it reached a deal with the U.S. Defense Department shortly after President Trump called on all agencies to phase out use of Anthropic's Claude. The reason is that Anthropic said it drew a red line on using AI for surveillance of U.S. citizens and using AI to run autonomous weapons. Let's discuss this with Georgetown Center for Security and Emerging Technology Executive Director Helen Toner. She is formerly an OpenAI board member. And Helen, do you take this as a sign that OpenAI is willing to let the government do with its AI whatever it chooses?
Hi, it's great to be with you. It's been a really remarkable series of events last week. I think one thing that is genuinely not clear right now is, did OpenAI agree to the Pentagon's red lines, or did the Pentagon agree to OpenAI's red lines? So the way that the company is spinning it is that they've maintained the same two red lines that Anthropic did around autonomous weapons and domestic mass surveillance. And OpenAI is claiming that the Pentagon has agreed to safeguards inside the contract and also in the way that OpenAI's technology will be deployed that will adhere to those red lines. The trouble is that the Pentagon is spinning it the other way and saying that they have gotten the standard that they wanted, which is that the technology should be available for any lawful use. And so there's been a lot of haggling over the details. There's been some remarkable scenes on Twitter with very high-level military legal experts, picking apart fine details of the small amount of information that's been released over the weekend. But it's hard to say confidently right now.
How much of a change have you seen at OpenAI? Because it seems as though it's a company that went from, a nonprofit with strong red lines and moral certitude and has gone now to a company that will do anything for money and survival. Is that unfair?
I mean, I think I'd put it a little differently, which is I think across the AI industry, what we've been seeing is something that people, inside the space have expected for a long time, which is that the technology is becoming more powerful and more capable. And that means that the incentives to use it and to use it in higher and higher stakes contexts are growing. And so I think this is certainly a change we've seen at OpenAI, but likewise at Google, likewise at Anthropic and other leading players is just that things are really getting serious. They're hitting the big leagues. And so the amounts of pressure at hand are rising. And different companies are managing that pressure in different ways. But it is, I think, pretty pervasive across the industry.
Do you think it's right then that someone like an Anthropic, and maybe others should adopt this tone as well, Helen, that they draw this red line when it comes to the U.S.'s ability to use AI and their systems for mass surveillance?
I mean, I would say that what we've seen actually over the past few days is that it's incredibly difficult to draw any bright line here. So if you talk to experts in autonomous weapons, they'll tell you actually some of the language that Anthropic had been using around sort of fully autonomous weapons isn't really a term of art, doesn't really describe well how AI is being built into the full kill chain that we're using in modern military operations. Likewise, if you look at what it means domestic mass surveillance, the Pentagon, the US government will maintain that they don't do domestic mass surveillance, but they're saying that based on a particular way of kind of defining those terms, and that may not match up with what a member of the public would consider to be domestic mass surveillance. And we've seen this movie before, of course, with the Snowden revelations back more than a decade ago. So I think it makes sense for the AI companies to be thinking very carefully about what their technologies are being used for, but I don't think it's as straightforward as just saying, these are no-go zones, and we can all agree on what that means for that to be a no-go zone.
Helen, of course, the backdrop for all of this morning is the unfolding war in Iran. And we were speaking with our last guest, Vlad Rikhter, about Iran's capabilities when it comes to cyber attacks, that maybe it's not as strong as China or Russia, but they certainly have them. What is the role of corporate America, of these big AI foundational models, especially those like OpenAI that are working with the Pentagon in these moments of conflict?
I mean, they're woven throughout at this point. The Pentagon is working very closely with a number of American companies, not just sort of the big tech giants, but also, of course, the Palantirs, the Andurils of the world, who are focused on these defense use cases. One thing to note is, based on everything I know, I don't hold a security clearance, but everything that I'm aware of from outside the government, it's very likely that actually Anthropic's Claude model was involved in operations in Iran. I think there's been some reporting to that effect because they have been partnering very closely with Palantir and have been in the hands of military operators for months at this point. So there's going to be a whole process of trying to swap that out for OpenAI now that the contract has been changed.
Yeah, the White House saying that something like that could take about 6 months. Helen, thank you so much for joining us. That's Helen Toner, again, formerly a member of OpenAI's board. Coming up, inflation fears resurface not just with the war in Iran, but also input prices in the U.S. soaring at the fastest pace since 2022. We're going to get insight from Bloomberg's chief economist, Tom Orlik. That's coming up next. This is Open Interest. Treasuries falling, yields move higher as conflict in the Middle East sends oil prices soaring, and data at the top of the hour showed U.S. manufacturing expanding in February, putting input prices soaring at the fastest pace since 2022. Joining us now is Tom Orlik, chief economist for Bloomberg Economics. Tom, marry what we saw from the data this morning alongside the price move in oil. Just how big of a threat is sticky or even inflation resurging itself?
So the story at the start of this year was really U.S. inflation heading back towards target and that triggering expectations of more Fed cuts. Two of these developments, firstly, the ISM data showing that surge in input costs, and then secondly, the U.S.-Israel attack on Iran and oil prices surging, they raise questions about that narrative.
So what does that mean, Tom, for WIRP? I mean, for expectations that we get further cuts from the Fed, because we still have cuts priced in. But if inflation is rising at a time when the labor market looks to be in pretty decent shape, I don't see how the Federal Reserve can continue to bring rates down.
So I think there's a few questions here, Matt. So the first question is, how does this war in Iran play out? So far, we've seen strikes on oil facilities. We've seen less transit through the Strait of Hormuz, but the maximal impact on oil prices, that hasn't come yet. We'll have to see how that plays out. Second dimension is what happens to inflation expectations. You'll always hear from central banks that they can look through one-off price shocks as long as inflation expectations are anchored. So one scenario here is this war is over quickly, oil prices come back down, inflation expectations stay anchored. In that world, the Fed stays on course, very likely, for rate cuts in the second half of the year once we have Kevin Warsh in as chair. A second scenario, which I think we have to keep in mind, is that this war stretches on. There is significant damage to oil facilities. The Strait of Hormuz does get closed. And there are concerns that US inflation expectations are unanchored following that post-COVID price surge. In that world, the decision for Powell, for Warsh, it starts getting a lot more complicated.
Let's just add to the complication. If you do have higher oil prices, Tom, to what degree does that also just act as a tax on consumers and also has the impact of slowing growth? How would you think about more tension in the dual mandate if growth slows but inflation moves higher as a result of this conflict?
So, and adding further to the complexity, the situation in the US has changed. The US, going back just a few years, a very significant oil importer. With the shale revolution, the US oil balance, well, it's pretty balanced. So if we look at Europe, if we look at the UK, surging oil prices, a significant negative for growth, cutting consumer spending power, as you mentioned. In the United States, because higher prices are a positive for oil producers, the impact on the overall economy, pretty limited. But within that, a positive for the oil producers, a negative for consumers, and consumer prices heading higher. All of that adds to the complexity for Chair Powell, Chair Warsh, as they think about the path for rates.
Tom, just got 10 seconds here. Were you surprised to see the turnaround in Treasuries?
So I think the Treasury market's also grappling with complexity, right? You've got the safe haven bid, which should push yields down. You've got concerns about a drag on consumers, which should push yields down. But what seems to be front and center is that inflation risk pushing yields higher.
Tom Orlick from Bloomberg Economics, really appreciate your time this morning. Tomorrow and Wednesday, Open Interest is live from Bloomberg, the Bloomberg Invest Conference. You'll hear from Apollo's Mark Rowe and Mike Arrighetti of Ares and Don Fitzpatrick of the Soros Fund. This is Bloomberg.